Bianca to the stage.
Thank you so much, Lee. Hello, everybody. I am Bianca. By day, I am Senior Insight Director of SMG. By night, I am the #1 groupie for the current absolute best band in the retail media space, the SMG band. I don't know if you've heard, but they are going to be playing on the stage later this evening, and I will most certainly be in the front row unless they were serious about me standing far away. So I'm really, really excited to see that later. Today, I'm going to be talking to you about retail media measurement. And it's really come a long way over the last few years. Only a few years ago, it was very difficult for us to actually measure retail media. And sometimes brands would say that it was easier for them to understand how their above-the-line TV campaign performed versus how a barker performed in store. Fast forward to today, and we have the opposite problem. We have data overload, or data fatigue, as I like to call it. There are so many metrics to measure retail media, and there are so many different methodological approaches, which makes it really, really difficult to know where should you even start. So today, I'm hoping to share some insight with you on what that could look like for a brand starting out, how you can start out your retail media measurement strategy, and also how you can then evolve it to run and fly. So let's start with walk. I think you will have heard today so much about how retail media has this incredible potential to go beyond the short term and actually really drive the equity of your brand, which is incredibly powerful stuff. And I 100% agree with that, and I'm going to be talking more about that a little bit later. But it is also very, very important for you to understand how your retail media is performing when it is live. So the first principle is about you building a bank of short-term ROI evaluations to understand the effectiveness of these campaigns and to benchmark that performance overall. I've put together 4 principles on how you should approach these to really get the most out of this first walk step. So first of all, it is the ultimate word on the retail media bingo card, standardization. And it is so important that we are comparing apples with apples when it comes to cross comparisons across retailers, but also as much as possible, comparisons across different media channels. So standardization is really, really important. The next one, spoiler alert, two out there. The next one is incrementality. It's so important that instead of just finding out how many sales you get during the live period of your campaign, you're actually asking the question, what would have happened if that person hadn't seen the ad? Would they have gone on to buy the product anyway? If the answer to that question is yes, then that media hasn't really driven an incremental uplift. And it's really important that you take that into consideration. So wherever possible, use a methodology or an approach where you can calculate that incremental uplift. The next one is the devil is in the detail. A lot of brands ask, once I've run, like let's say 100 or 1,000 evaluations, can I stop? Like, isn't that enough? The honest answer is yes, you might be able to move to an approach where you can do more of a litmus test. But honestly, it's so important for you to get into the really, really granular detail of how each of your individual brands are performing, how your channels are performing across different objectives. So you've got to build up a very, very solid bank of results before you can get to that point where you've built up a big enough bank that you can use it for forecasting, etc. on its own. And finally, one more little clip. Thank you. A one-size-fits-all approach doesn't specifically work. I know I've told you that we should be measuring all of these retail media channels to understand how they're performing in the short term. That said, we cannot expect them to all perform the same. Some of these channels might perform a lot better in the short term and drive that tactical growth, but it's important that we don't overinvest in these channels versus other channels that are potentially having a longer term impact. So those 2 points I'd like to talk on a little bit more detail. So on to the next slide. Great, thank you. I've got 2 examples here to talk about specifically that are examples from PlanApps. PlanApps is our in-house proprietary tool. We uploaded 20,000 evaluations last year, so we have a huge bank of results on there, and genuinely every single day we're still learning something new. Look at these 2 channels. We have an aisle fin and we have hotspots. Both of them pieces of cardboard, both of them on the aisle. One of them is a little bit more stand-outy, one of them is a little bit more embedded. Going to perform the same, right? Surely. Very similar performance you'd expect to see? Well, actually, one of them performs quite differently from another. So our hotspots have a significantly higher return on investment, even though their cost per store is higher. So just a small example there where you would expect 2 pieces of cardboard in the same area of the store, they're going to perform the same, right? Not quite, they're still going to be different. Another example I would like to share with you is, of course, the digitalization of the store is an incredibly exciting topic. And there's many reasons that we should be excited by it. But digitalization does not specifically always mean better performance. We've got a lovely example of some imagery from the Kellogg's NPD UK launch earlier this year. And you can see how absolutely stunning those static touch points look. And that's example imagery, but overall, static performance generates a really, really strong uplift of £2.60. And that is quite a lot higher than the ROI of £1.87 for digital. But of course, I'm by no means suggesting that we should disregard and be less excited about in-store digitalization, because it's really interesting to see that that pound uplift per store is actually significantly higher. So while we might not yet be getting that positive return on investment for an NPD for digital screens, we are seeing really strong pound up per store, which is showing that these channels are really having an impact. Right, so now we're doing a very good job at walking very briskly. Now it's time to think about how we can take things to the next level and move on to the run stage. I think one of the most important things on the run stage is for us to fully leverage one of the biggest USPs of retail media, and that is first-party data. There's a very, very good evolution that we can make between walk and run. In run, we're very much focused on what happened. Was the media seen? Was the media engaged with? Did the media drive sales? But now we can move on and get a whole lot more personal while still being very GDPR compliant. Oh, not yet, please. And we're going to focus on answering the question, who? So who saw the media? Who engaged with it? Did they go on to make a purchase? And if so, did they make that purchase in-store or online? So it's really getting a lot more detailed. And instead of understanding whether you're shifting product, it's understanding whether you're making a shift in customer behavior, which is incredibly exciting. I have a wonderful case study to share with you from Alice 11's recently launched Asda Access proposition, which is the first-party data off-site proposition. This was a campaign that was activated for Nestlé in September, October last year. And as you can see, there was an array of beautiful ads that were targeted to people who had previously bought cat food or anything from the cat category at Asda. We can assume that they therefore have cats, or we can at least hope that is the case. So once again, already a brilliant and efficient use of marketing because we're talking to the right people. On that talking to the right people, of those over 500,000 of shoppers who were targeted, we can actually then break it down to understand a little bit more around who those shoppers were. Nestlé wanted to talk to their loyal shopper base. so that they could inform them about this amazing NPD launch and just drive more excitement for the products that they were talking about. So they did talk a lot to current shoppers, but they also spoke to lapsed shoppers and shoppers from the wider category, including pinpointing specific competitor customers that they wanted to talk to. The results of the campaign were brilliant. They delivered a really strong ROAS overall, but I guess the parts that I'm more excited about is it delivered a very strong uplift for the featured SKU, but also had a really high halo impact on the brand. And it also generated 8% of the sales coming from completely new to brand shoppers. That's really exciting, especially in the cat category. The wonderful data science team from Asda pulled some more stats recently, and what they found was of those 10,000 new shoppers that they were able to bring into the brand during the campaign, 69% of them actually went on to make a repurchase in the following months. That is astounding. Honestly, that's higher than what we would expect to see. I would say that that probably is very much related to the cat category. I don't have a cat myself, but I'm told they are particularly fussy pets. So if you find a food that works for them, you are 100% going to continue buying it. So CLV in that sense is going to be very, very relevant. And if you'll forgive me, we can call it cat lifetime value in this instance. So a really amazing example on what we can do leveraging this first party data in the run. So a few quick principles from me on the run side. Firstly, it is even more important with these run campaigns where you're leveraging first party data to start with the end in mind. You need to be super clear on your objectives so that you can use those throughout the campaign, from when you target to how you optimize and ultimately how you measure performance at the end. The next one is our good old bingo word, standardization, still incredibly relevant, but not as simple. If you think of the different categories that we're looking at and the different attribution windows that you might be measuring against, it might be that one category needs to be different from another. So don't just standardize for the sake of it. Think about what's going to be most relevant to your category and your brand and use that as your own form of standardization. Beware the temptation of a very strong ROAS. I think especially when you're looking at an off-site campaign where you're measuring the campaign in flight, it can be very tempting to go after the short-term ROAS and just see those sales grow and grow and grow. But honestly, what is the value of targeting a shopper that already has your product in their basket and are about to check out? You really want to be focusing on how you can bring in those incremental shoppers if that's your objective, or how you can drive bigger halo on the brand by trading shoppers up or trading shoppers across, as opposed to just targeting shoppers who would have bought your product anyway. And finally, the detail is just as important. There are so many amazing things that you can learn using first-party data, but I think we can also fall into the trap and temptation of trying to do too much at once. It's so important to identify one test and learn strategy per campaign and focus on that to make sure that you can actually get a robust learning. Okay, we're doing so well. We've done walk, we've done run, we only have to fly. In terms of fly, this is where I think it's about bringing it all together. It's understanding how these channels work together, and it's looking beyond the short term into what power can they actually drive in the long term. This is the new stuff. I don't have fully fledged principles and loads of examples to show you, but I do have one very recent example to share with you from Unilever in a bit. Just to talk to you about how we run evaluations in this longer term omni-channel phase. Because of first-party data, we can use a test and a control audience to measure performance. And this is incredibly powerful because we can track these customers not only in the live period of the campaign, but we can continually track them in the longer term. So this is an amazing study that we did at Boots, and we're looking here at a Dove Advanced launch, so a new product within the Dove shower gel range. Here's a few examples of the amazing creative that was executed as part of this campaign. But there were 18 activations across 12 unique channels, and this delivered a reach, so unique impressions, of 5.6 million. In terms of this campaign, what I wanted to show you are a couple of questions that we can answer with the data. The first one being, did the campaign deliver an incremental return? So using that audience level data, we can compare a test audience with a control audience. This is the pre-period where you can see they're really aligning pretty similarly. So the question is, what happens next? Well, in the live period, you can see a diversion between the lines of the test and the control stores. And this is showing that we're generating an incremental uplift in the live period, which is incredibly powerful. It's showing that these campaigns are doing the job they need to do to drive that incremental uplift. But using this audience level data, we can really get interesting results in an extended post period. This is where the power of retail media comes in. Something that we haven't really been able to measure before historically, but that we're being able to see more and more, and that is understanding whether these campaigns are driving a sustained long-term uplift. We've done a few studies like this, and the amazing news is across a few categories within the health and beauty sector, we're consistently seeing the sustained uplift in the post period, which is really positive to see. Another question you could potentially ask is, where did the growth come from? So you saw earlier in the Nestle example, you can split your audience by current, by lapsed, by new to brand, and you can understand how the purchase rates across these different groups looked, and also, of course, continue to track that into the post period, and that's where you're going to be able to start calculating your customer lifetime value. Finally, we're also able to start delivering and deriving learnings on the optimal number of touch points to activate. Over here, we have an example of the true purchase rate across a number of different channels. So the purchase rate for one channel versus the purchase rate for shoppers who've seen 2 channels, right up to 5. We actually had shoppers who saw more, but we didn't have enough robust results to share with you on that. But what's really positive to see is there is that upward trajectory. The more shoppers are being exposed to, the more likely they are to make a purchase. That said, it's not really rocketing up. There is a bit of a diminishing return there. So it's really important for you to work closely with your retail media managers to find that optimum number of touch points to really drive the results forward. So very quickly, like I say, I don't have full principles on the roadblocks on the for Fly, but a few things are to be aware of the roadblocks. So there is a lot more complexity in measuring in this way, and we certainly haven't gotten it perfect yet. And anyone who says they do have it perfect, you might want to question them a little bit on that. So it's really important to be understanding of what we can and what we can't measure in this space. And also, let's be transparent about it. Let's make sure that we are being very, very clear about what is possible and where we need to take more indicative views on results. And finally, experiment. There's so many opportunities here for you to do loads and loads of test and learn and really understand more, even if the methodology isn't perfect. So that's it. So in summary, a very successful measurement strategy will enable you to walk by building a solid bank of evaluations, to run by start incorporating first-party data, and to fly by bringing it all together in an omni-channel and long-term view. Thank you so much.